Edutrainment Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your Edutrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your Edutrainer and coach for our Edutrainment Workshops. And we're doing our entry-level introduction into life insurance, and all this week, our introduction into Survivorship life insurance, where you can put two people on one contract, and believe it or not, two can live cheaper than one. We're also using our Lincoln Benefits software, their Eclipse illustration software system, because we've deemed it as the easiest tutorial for somebody to learn life insurance. If you have to learn on somebody's software or proposal system, we think theirs is the best. Just go out to their site, www.lblsales.com/ETW. As soon as you come out to the site, you'll see Eclipse Illustration Software Installer. Go ahead and click on the installer and they'll download, and then you'll be able to go page by page with us as we recommend. If you haven't done this yet, you really need to do this. We'll be using it later on this week, and you want to have this so that you can go with us. We found that really helps, and that there's some really great helps for basic learning on this software package that are already embedded in the illustration. Also, Lincoln Benefit and their parent company, Allstate, have put together some really great support material, and the site, the website, or the URL is on the bottom of our screen, and it's also attached to the document that attaches to this video. All you have to do is just cut and paste it and put it in the browser. It's too long to say it on the air like this. And when you come to this site, you're going to see several helps and support material. We love the Facts of Your Life booklet. It either comes in a hard copy and or an email attachment. It's a great harvesting tool for all your clients' assets, and we highly recommend it. There's things in there that I didn't even know to ask. I thought that was really tremendous, and it's a great little piece, a great prospecting tool that you can give to your clients, or again, attach email and send it to people kind of en masse. Also, it has prospecting and postcards, prospecting letters and postcard letters that are already pre-done. Allstate's already approved these. Of course, if you're a FINRA licensed registered rep, you're going to have your broker-dealer go ahead and authorize and approve it. And if you're with an insurance agency that has protocols like that, you're going to need to do the same thing. Now, the reason I bring this up is these are really good marketing campaigns, easy to understand. You say, I don't know how to really speak about things like this, this is an excellent tool. Also, if you're saying, I've kind of forgot where I saw this out on the internet, and we have this a lot. I get traffic say, Steve, I saw you on Google, but I don't know what class I'm in. Well, if you go to our archives at www.brokersalliance.com, as soon as you come to our homepage, you'll see the red button, On Demand Video button. Click on that, and all our shows for Edutrainment Workshops, all the way back to day one. Remember, this is a 60-part 15 minutes a session video vignette series. So you'll want to be able to get out there on demand, just click on it and you're there. And by the way, also out there is all our archives for the daily show, the Business Insurance Zone, and of course my weekend show called Welcome to the Weekend with Steve Savant. So any of these ideas. Now today, we're going to look at some of the grids. Now we talked about this about leverage. We talked about discounted dollars using life insurance, especially second to die life insurance, where the discounted dollars or the leverage is really pronounced. So let's go to the grids now. We'll look at a few things to give you a kind of idea where the numbers lay out. Okay, let's look at this grid. This is our first one, male and female, both age 65, and they're both the best preferred level that second to die offers. And I have several carriers out here. I didn't put them all on here. I just basically put the top 10, or in this case, the top 12. And I've noticed that what I'm looking for is not so much the carrier language, but actually the price tag for this to give you an idea of what I was talking about. This is $1 million guaranteed, single pay, one-time pay, walk away. And look at these numbers. Look at the leverage on this. I have $180,000 in a single pay for the age last birthday at $180,000 at 65. I mean, when you look at a grid like this and you see these ages and you say, wow, that is real leverage, that is a huge number. I want to look at what's the total market. Now listen, from $180,000 in the first one, in first place, all the way down to $360,000 in the 12th position. Look at the span on second to die. That's why it's important when I price this out. I can't just take any carrier. I'm looking again at survivorship using the guaranteed universal life boilerplate for this because I'm showing indemnification. So when I'm looking at a grid like this, a spreadsheet, I'm looking at several big name carriers, all the big ones here, including Lincoln Benefit, our sponsor, who is a top player in second to die or survivorship. And when I'm looking at these numbers, I'm looking at the ratio or this leverage or the discount that I'm getting to put this in a one-time single deposit. That to me is a pretty huge leverage. When you're talking about $200,000, that's where the average is, about $200,000 for $1 million worth of coverage on the best preferred non-smoker for $1 million, so at age 65, that's pretty good grid. Now what I want to do now is I want to go to our second grid. Now the difference on this spreadsheet is that we now are preferred non-smoker, not the best ranking, but just preferred non-smoker, and we're still in single deposit. So again, notice that there was about somewhere around about a 7 to 8% increase. Instead of 180,000, now I'm at 188,000 is my best. So I have to pay a little bit more because I don't have that stellar of a kind of a health condition. So I want to look at that grid and say, based on this price for preferred non-smoker for 65, both male and female, at $1 million, single deposit, guaranteed universal life, that's the price tag I'm looking, again, right around 200,000. So the difference between preferred best and preferred non-smoking is not that much. But it's important to point out that this is the kind of thing we look at because it's going to matter during underwriting. Now I'm going to show you now the third grid. Now the difference in this spreadsheet is, again, single deposit, male and female, both $65 million worth of coverage, but this time we're at the standard. Now remember, as we get higher up into the 60s and age 70s, we're not going to get the kind of preferred, super preferred, preferred plus, and preferred non-smoker. We're going to be in standard plus or standard land. And when you look at this, the lead carrier is another, actually they switch around here just because standard's a little different for every carrier. But now we're at $227,000. The average right around here is about $235,000 to $240,000. That's the difference between $180,000 plus for super preferred and standard non-smoke at $230,000, somewhere in that vicinity, averaging the first couple carriers on the grid. So when you're looking at that, you can say to yourself, wow, underwriting really matters. I want to be able to position my client for the best possible underwriting because that price just went from $180,000 plus to $227,000. That's a big spread between super preferred and standard, and so you want to be able to measure that out. Now what I want to do is go from our single pay to a 10-pay grid, and we'll show you those spreadsheets and give you an idea where that lays out. Now this grid shows male and female, the best possible preferred non-smoker, and we're doing $1 million again, but this time we're doing a 10-pay. And look at the premium. So if I don't have the kind of single deposit, but perhaps I have an annuity that I can annuitize over a 10-year period. Perhaps I have cash flow in my budget so that I can do 10-pay and I'd like to be done with it. So when I look at this and I say, wow, $22,915 is our lead carrier here. And again, look at how the actual spreadsheets keep changing. Every carrier is different on not only health, but now in this scenario, 10-pay. All these contracts that we're showing you are basically to age 100. Now, when I'm looking at 22,000, the grid here is about averaging right around 23,000, somewhere in that vicinity when you take on the first 5 or 6 carriers. So I've moved from a platform of 180,000. Now, if I pay this 10-pay, I'm going to be paying $220-something thousand. So did I get a really good discount for paying single deposit? The answer is yes. I'm already on a leveraged product using Survivorship. When I'm using single deposit, if I have that kind of cash, and remember, especially with interest rates being so low, this is a great time to use cash, especially if you don't need it for emergencies and you got plenty of other liquidity. This could be a great play, single deposit. But if you don't have that and you want to be able to kind of modify it, you can start doing a 10-pay. Now what I'm going to show you next is I'm going to show you another 10-pay, but I'm going to show you the preferred non-smoker rate to show you how it now starts to graduate down. We're not only paying longer, but the underwriting offering is a little bit less. Now on this grid, we're still doing 10-pay, 65, male and female, $1 million worth of coverage. But now I'm only preferred non-smoker. That premium went from $22,000 to $23,000, about a $1,400 increase for our top carrier. And again, because we went to a different actual underwriting offer, the actual grid changed. So that's why I said it's so important from player to player, from carrier to carrier, from client to client. I always look at all these spreadsheets just to make sure I've done my due diligence to make sure I have the best possible carrier, because second to die is all about leverage. So when I'm looking at a 10-pay, again, at preferred non-smoker at 65, I'd be paying $23,413 with our lead carrier, and that means I'm going to be spending about $234,000 to get $1 million worth of coverage. I do a 10-pay and I'm set all the way up to age 100. Some of these contracts even go beyond that. Again, that's another issue. If you have really super preferred clients, you're going to have to look at and make sure that the second to die contract goes all the way out to 120 just to cover yourself in case mother, who is more likely, turns 100. Now I'm going to show you one more grid in the 10-pay, and that's standard. Now we're going to skip to the standard boilerplate for continual pay, just kind of expedite our time. And here we are, we're going the opposite way now. We're going to go from standard to preferred non-smoker to preferred best. And when I'm looking at this, here's the standard boilerplate for continual pay all the way out to age 100, $12,763. Again, the grid reconfigured itself again. Depending, carriers change all the time. That's why we have to do our due diligence on underwriting, on our age spreads, on our male and female, how long we're going to hold the contract. All this matters, and that's why we always do huge due diligence spreadsheets and make sure our grids are reflecting the market so we can make a good call for the client. 12,776, the average, you notice, is the first 3 or 4 people are all in the 12 to 13. So right around that idea, if I can't afford a single deposit, if I can't afford a 10-pay, and my health is just standard on the 2000 CSO mortality table, $12,000, if I live to life expectancy, I might be paying that for the next 20 years for the male and maybe 30 total years all in for the female. So even at $12,753 times 300 or 30 years, that's still a pretty good leverage. And that's why even continual pay, that's why we really encourage people, wow, you could still get into this market at a continual pay if you have cash flow. In this case, I need a little over $1,000 a month cash flowing to make this number work. Now what I want to do now is show you another grid using preferred non-smoke with continual pay. And again, now we're looking at preferred non-smoker, male and female, both 65, $1 million worth of coverage. And I really like this because now we went from standard to preferred non-smoker. We went from about $12,800 to the lead here, again, changing again, $11,753. So when you think about that, that's a really good, that's about $1,000 a month. And that's why it's really critical to make sure when we do our parameds that we're doing them correctly, that we look for any APS information that's going to be negative so we can go right away to the physician and make sure we have supporting documents to see if we can put more lifestyle credits on the other side of the debit accounting for underwriting. We want to look at this and say, there's our numbers. And now every grid that we show you, again, when you have these kind of spreadsheets, it really helps us do our due diligence and make sure we're doing the right thing for the client. Now I want to show you, if for continual pay, for the best possible underwriting for a 65-year-old, I think you'll be amazed at how cheap this really is. Now we're on the preferred non-smoker, best preferred ratings, continual pay to age 100, for the same face amount of $1 million. Now, why am I keep doing this as a repetitive? Because I want you to be able to see how the grid changes. And again, another carrier up on number 1, they weren't even number 1 for the first 3 or 4 examples, and now they're number 1 here in this scenario. That's why it's very important to keep checking the grids and the spreadsheets to see what's happening. And look at this. The lead carrier for continual pay now is sitting at $9,795. So the first 2 or 3 average a little less than 10 grand. So if I have a leverage position where I know my client's going to live, even if they live 30 years, and I might be able to have to shell out $300,000 to life expectancy for $1 million, and that is tax-free if it's set up correctly, this is a huge leverage play. That's why we keep introducing second to die for transfer, for state taxes. There's so many applications for this. And that's why it's important to always check the spreadsheet grids, measure out which carriers are playing because of health considerations and because of contractual guarantees to age 100 or to 105 or all the way out to 120, and to look at all the ways you can do it: 10-pay, single pay, continual pay.
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse. the marketing arm of Brokers Alliance. And sponsored by Lincoln Benefit Life, an Allstate company.